Joining us to talk currencies is Marc Chandler, Global Head of Currency Strategy at Brown Brothers Harriman. And on gold and other precious metals, we have Sean Hyman from Money News Ultimate Wealth Report. Guys, thanks so much for being with us. Sean, I'll start with you. Where do you think that the dollar can go versus the yen right here? It seems the yen is really driving this, especially with the news out on the government bond buying program this morning.
Yeah, I think the dollar-yen could continue to rise. The latest G7 meeting basically gave the green light for the yen to be, further devalued. Also, the dollar index is breaking near-term resistance. Could go from the 83s to the 84s, possibly 85, where it would reach long-term resistance. So I think dollar-yen could still go higher. The dollar broadly could still go higher a little bit as well, which also could be a bit bearish for metals like gold and silver.
And Marc, what are the technical levels that you're watching there?
So I was watching on the dollar. I was thinking that dollar-yen could go up to about 105, but I'm really watching carve out in the euro now. Everybody knows that the yen's been weakening and the G7 gave its blessings. But I think that the euro is very interesting as well. Even though the Europeans seem to be getting their act together in terms of moving back on austerity, we see the euro weakening, and it's looking like we could break down pretty sharply. We have a 120 for the year-end target, and I'm afraid that might be a bit on the conservative side.
So what might be a less conservative estimate there, especially with the news out this morning about the recession in France and Italy, and also Germany seeing some weakness here? I mean, could we see a bigger slide in the euro?
Well, I think that we could go down towards, I'm looking for 120 by the end of the year, but I think we could see 115 on a bit of an overshoot. I think that the fundamentals in Europe are much weaker than they are in the U.S., and we're going to get that reminded later this week when we get the weekly initial jobless claims. Also, one of the big knocks on the U.S. has been the large budget deficit, and that is falling faster than most people had expected. So I think that the fundamentals in the U.S. make the U.S. look best out of the bad bunch.
Sean, you mentioned gold earlier. I know we see it still hovering above the 1,400 mark. I know a lot of people have been piling into gold, especially with the uncertainty over the deficit. Now we've gotten some of those numbers out. It's shrinking as a percentage of GDP, but we do have the debt limit debate that's approaching pretty steadily this summer. Do you think that gold will stay above those levels? Do you think it starts declining from here?
I think the long-term prospects for gold are good, but near-term I do see downside pressure still happening in gold. Gold had broken a year-and-a-half-long rectangle pattern. The price target there takes that down to about $1,200 to $1,250 an ounce. I do believe we will get there in the weeks to months ahead, so I do see further downside. From there, though, I think that we will start to rebuild and see gold approach the $1,400, $1,500 level, which is closer to where gold producers' average break-even prices are for production.
I think that what this really shows us, too, is that gold is not what many people have claimed it to be, some kind of great protection. Gold is well off of its peak, not only in nominal terms, but in inflation-adjusted terms. It's not really, I think, what it's been often sold as by many people.
I personally think gold is toast. When you think about it, if you were a gold bull, and you got quantitative easing and then QE7 from the Japanese, and nothing did it. We peaked out at 1900.
That's why it was at 1900.
Two years ago.
The anticipation of all this.
If you run the gold chart over the NASDAQ chart, over the Nikkei chart in 1989, they're identical. Once bubbles pop, they go all the way down.
But Sean, you say that there could be some resistance at 1250. When do you think we get there?
That would be support.
Yeah, I think that there could be support somewhere around those levels. Those are minimum price targets, so they can go down further than that. But the reason why I think that it'll bounce back is because, if you're a gold miner, you're not a charity, you're a for-profit business. You're not going to dig this stuff out of the ground for free or for an extended period of loss. And so if you see that gold is going to be down for any length of real time, then you're going to slow down production, possibly even halt production until prices come back up. This happened with natural gas. It happens with other commodities, and it could definitely happen with gold as well.
Gold wasn't up on just supply and demand.
Gold was a classic buy.
I know. It was up on, God knows why. But.
The story of you can fit all the gold in an Olympic-sized swimming pool, it was such a compelling story. All the gold ever mined in an Olympic-sized swimming pool, or a 30-meter cube, and no one had it. It was such a, bubbles come around spectacularly good stories that are believable. And so once everybody believes in it, there was no one else to buy.
And when you watch the stocks of the miners, too, the miners didn't follow.
The stock market told you something that the ETF market, the gold ETF volume just kept picking up, and now it's on the reverse. And so it wouldn't shock me to see gold back at 500.
All right, Marc, Sean, we'll leave it there. Thanks, guys, both for being with us.
Thank you.